Guys, we have Bitcoin sitting at new all-time highs.
Hey!
I think it was last show that I think we were all pretty much in agreement that Bitcoin was going to hit a new all-time high before the halving. And I sent a survey out, and over half of people, I believe, I'll try to find the tweet, but over half of people didn't think that Bitcoin was going to have a new all-time high before the halving, or maybe even this year. Let me see if I can find that. But yeah, what do you guys think? Are you surprised by this move? Is this just business as usual?
We said, I think, was it last week's show or the week before? We said, hey, we think all-time highs are coming. And I said, I think it's going to happen in a couple weeks. And here we are. It wasn't even a couple weeks. It was like 10 days or something.
Yeah.
So it's obviously awesome. Not that surprising, but perhaps a bit faster than maybe we even predicted on the last show or two. But yeah, it's great. It's also interesting because we are not just in a bull market for Bitcoin, but we're obviously in a bull market now in Ethereum, maybe in alt season. We've also got a bull market still happening in stocks. Even gold is rising lately. Bonds are rising a little bit. So it's a pretty good environment out there right now for investors generally.
Yeah, I was telling
Chris, I guess you can cut your beard off now.
Oh, well, as of right now, we're below all-time highs. If we can get a daily close above all-time highs, I'll cut it down.
Oh, I thought it was if we made all-time highs, you could shave it.
I don't know. I'm changing it because I kind of like the beard. I don't know. What do you guys think?
Okay.
I think it's looking pretty good.
Do you like this or not? Yeah,
it's looking pretty good.
I'm trying to keep it a little clean. I'm gonna go to a barber this week and see if they can tell me how to keep it from turning into like a homeless man beard.
That's key.
But if Nikki likes it, that's really what matters. So
that's right.
I like it.
Yeah, awesome. Yeah, so I was telling people in the community that I thought whenever we broke that 50K area, we were going to be at all-time highs pretty quick, because Bitcoin trades from major area and then it has open air and it runs to the next area. So that's what happened. But I will admit, it definitely happened faster than I expected. I had an extreme bull case possibility where I thought it could go parabolic pretty quickly, which it did. And the reason behind that, obviously, is the ETF flows. I mean, the ETFs are still trading massive volume and inflows. And yesterday, so today is Wednesday the 6th that we're filming this. Yesterday, Bitcoin ETFs did 10 billion in volume in a single day, smashing previous records. Yeah, and you can see the average volumes going up, so absolutely wild. And yeah, this was the survey where this was back in early February. So just under a month ago, I asked, will Bitcoin hit new all-time highs in 2024? And just shy of 51% of people said they disagreed with that. So that to me says that a lot of people are caught off guard and experiencing this little thing we like to call FOMO, or fear of missing out.
It was interesting though, when we hit that all-time high level a couple of days ago, the quick sell-off that happened right after. What did you make of that?
Yeah, let's pull that up and we'll talk about the chart. So this is the 1 hour chart, and you can see that when price broke above 64K, it ran from 64 to 69 really quickly in the span of just like a day. And then it pulled back a little, like just under the all-time high. So for you guys watching the video, this yellow line around 69 was the all-time high. It came a little shy, had a pullback, a little liquidation of it, where anybody that had stops too close on this run up got taken out. And then it pulled up and it spiked above the all-time high and then crashed. Let's see, what percentage was that? Crashed about 14% in the span of 5 or 6 hours. So that was a really big liquidation event. And was doing some research, like there's always, several narratives, but one thing that actually did happen was there was an OG that had some coins from 2010, and I think he sold maybe like 1,000 of them. But anytime somebody just fat finger dumps a whole bunch of supply on the market, especially at a major zone, what that does is it clears out the order books, and anybody that had stop orders, like sell stop orders, when those start to get triggered, it just adds fuel to the fire. And then you get these fast liquidation events. And actually, let me show you the chart. I caught this. I didn't buy the dip, but I caught it right as it was at its low here in the 59K zone. And I said, BTC running stops and liquidating over leveraged longs. This is typical all-time high price action. So a lot of people are like kind of taken aback by this and like kind of freaked out. But one thing I think they need to know is that this is what Bitcoin typically does at all-time highs. It's not like you just get to it and it's like, okay, see you later, pew, to the moon. It's like usually there's some consolidation and some chopping around there because so many people just have massive orders either sitting on the books or that's an emotional price level. And so they either yeet into it and just buy, or they dump coins they've had for the past, 10 or 12 years. So yeah, that's what happened.
I mean, also Bitcoin is just known for being a technical analysis, beauty queen. And so it, as expected, of course, it hit the all-time high resistance, right? Made a bit, went right over it. And then boom, we had that pullback off of that resistance level. So makes complete sense, really. And I think that the pullback is actually proving that it could end up being shallow, and that strength could continue from here because it bounced right. I mean, it bounced right back in a pretty healthy way. So it looks like the buying momentum is not going to be slowing down, and that pullback is going to end up just being a shallow correction. I won't even call it a correction.
Well, I mean, and here's the thing. We could absolutely pull back much deeper and like really clear out the order book. I'll just show you some examples from prior market cycles. So if we take a look at the 2021 cycle, there's a couple of like key price levels here. There was one around 14K, but the prior all-time high was up here around the 20K zone. And you'll notice that on the 14K break, it took about a week or so. But then once we got close to this all-time high, it hung around this level for about 3 weeks. So you can see here, just kind of like we saw recently, that it came a little bit shy of it, pulled back, stabbed, touched it. And then from the actual tag, that was, at least 2 weeks of consolidation. And then going back to the prior market cycle from 2017, when it broke 1,000, there was a whole lot of FUD around China banning Bitcoin. And that's what this big kind of capitulation candle is that you see here. But it took about almost 2 months of consolidation. And you can see from that pivot high around that all-time high, prices actually crashed over 30%. So let's think about this. What if Bitcoin pulls back, 30% or so from these all-time highs around 70K? What would that look like? Well, that would put us down around that prior strong resistance, now turned into support zone around 48K, which would actually be, I mean, this lines up on a lot of TA tools. Like it's in what we call our Fibonacci retracement sweet spot area. It's the prior pivot high from when the ETF got approved. You've also got the 200 and the 100 and the 50 period moving averages down there. So I mean, there's really 3 scenarios. And I'll say this, there's no guarantee that we're going to break out to a new all-time high and then go to, 6 figures. I do think that's the most likely scenario, but just like everything in trading, there's no guarantees. I think the odds favor that. And then if you look at that bull case and you say, well, how could we get there? Well, the fastest bull case is we consolidate here for a couple of days, and then we spike very, very quickly, which I actually think would be not the healthiest price action. That could potentially become parabolic and unsustainable if it moves too fast. Where the other situation is kind of like the 20K break, where maybe we consolidate here for a couple of weeks and then we get like a nice breakout pattern above 70K, I would actually love that, because that would be another opportunity for me to add as a breakout trade with better risk to reward. Or something happens like the 1K break where we get a nasty washout of over 30% in a few days. And on that, I would also be interested in a dip buy if the order book got washed out and there was like complete fear, and like, if Peter, what's his name, Schiff was cracking up again. So
his tweets have been funny.
Yeah, poor guy. I mean,
he's in denial.
He was excited because gold did hit a new all-time high.
Sure.
And yeah, I mean, it's up, probably a few percent over the past couple months. So good for him, man. I hope he's doing okay. Peter, if you're listening to this, which I'm sure you're not, but if you are, we're worried about you, man.
There might be something to this gold trade. I don't know. I mean, look, it's no Bitcoin, but gold's interesting. It's showing some very bullish action. We actually wrote about in the Daily Note today how gold miners have been really lagging the gold price over the last 3 years. And that's one that I'm kind of looking at as maybe a potential catch-up trade. The reality is they're not going to be like the crypto miners. They're not going to move the same way those did. But maybe they can join the party too. I don't know. It's interesting. Gold's definitely showing some strength here. And hey, it's one of those situations we always talk about it. It doesn't have to be either or in investing. Peter may have closed his mind off to other asset classes, but we haven't.
Yeah, I mean, look, I am long gold, not a paper asset. I've got gold buried in the woods somewhere, but yeah, I mean, look, the chart is actually beautiful. If we've shown this probably 1,000 times on the show, but really, really like one of the biggest cup and handle patterns I've ever seen. And gold is very, very slow, but I mean, the chart is really nice. I mean, the breakout, and my next target's up around 25 or 2,600. But yeah, when you look at the returns, when you look at the CAGR, the compound annual growth rate, or just the actual returns, gold moves so slow that, it just makes a lot more sense, I think, to, at least for me. I mean, my Bitcoin position dwarfs my gold position, but yeah, I like this stuff. It's shiny. It's fun. It's tangible. So the boomers love it. And is it the best form of money? I don't think so. I mean, Bitcoin runs circles around it, but yeah, I mean, it's cool. Both of them are going up. So
yeah,
it's not a zero-sum game.
Trading gold is definitely a snooze fest, though. Silver and gold.
Like, oh yeah, which Bitcoin is now more valuable than silver. It just it just exceeded silver's market cap around 1.2 trillion.
Ooh, wow. That's real money.
That's real money. Wow.
Yeah. Let me see if I can pull up this chart. Oh, actually, it says that silver now went up above Bitcoin a little bit. So they're basically neck and neck. Yeah, they're fighting it out. The silver bugs and the Bitcoin bros are hammering it out. But Bitcoin is now more valuable than Meta and Berkshire and a whole bunch of other equities. But this is where my mind is like, gold, it changes day to day. It's a 13 to 15 trillion dollar market cap, and Bitcoin is basically 10% of that. So the ultimate bull case here is, does Bitcoin 10x, or does it go up some and suck out market cap from gold, or do they both go up? I think in nominal terms, in USD terms, they're going to both go up compared to the dollar, because inflation and money printing, and the dollar is not a finite asset. So gold and Bitcoin are. Well, at least Bitcoin is. Gold is like scarce, but we don't know how much of it really is out there. But yeah, I don't know. What do you guys think? Are they both going to go up over the dollar over time? Do you see Bitcoin eating gold's lunch?
I mean, you have to love scarce assets in a world where we're doing 6 to 7% deficits to GDP every year. It's the money supply is growing at a very fast rate. So you got to love anything with relative scarcity relative to the dollar. So, I mean, maybe not everything, I don't know. Beanie Babies, maybe not, but
Stanley Cups.
Stanley Cups,
I got myself a Stanley. I call it my manly.
I can't believe he has a Stanley and I don't. I have like a knockoff version.
You got a family. You got the fake Stanley.
It's the fake Stanley.
I really like this thing for pickleball though. Like it's got a handle and it's got a straw and it's thin enough that I can put it in my truck. And yeah, man, I'm on the Stanley bandwagon. I only paid $12,000 for this thing.
You just got to make sure that the bottom of it doesn't come out. That's the whole.
Is that a thing?
Yeah, people were getting spooked a couple weeks back because there is a little bit of lead in one of the components in the bottom of it. And if you damage it enough on the bottom of it, if you're slamming it on the concrete, I guess that thing can get dislodged and.
Oops. I did drop it on the ground yesterday. It's got a little dent in it. So if I get a little lead poisoning, you guys can continue the show without me.
When this podcast starts going off the rails, we'll know.
Oh man.
When he starts saying that gold is better than Bitcoin, then we'll know something's going on up here.
There we go.
Yeah. I've seen the lights.
Says I'm all for CBDCs.
Yeah. Something's wrong with Chris.
Exactly. Yeah. Well, let's talk about stonks. What's going on in you guys' world? We talked about this the past couple of weeks, how the indices are in an upward trending channel. And until we either go parabolic or get a dip below it, it doesn't really make sense to run a whole lot of TA on this. But what's been popping? I know Pelosi's still crushing it on NVIDIA. What else is happening? Wow, another gap up today. Yeah. Where is the high here?
It's nonstop. It's crazy.
AI. So yeah, it's great. I mean, SMCI, the other AI darling so far this year, is getting added to the S&P 500 index. So you had that one gap up again to new all-time highs. It's up every day. And but beyond AI, actually, there are a lot of stocks working in this market, and it's been pretty fun action. There's been big moves in the past few weeks in a lot of individual stocks. We've even seen some of the small caps starting to get a little bit of life. I do have some concerns. There's some odd action still happening in regional banks. The one troubled bank of the moment, New York Community Bank, NYCB, that one's down over 40% today. It looks like it could be headed to, a forced takeover or who knows what. So that could create, maybe a pullback or maybe a pause here for stocks, maybe some more scares in the banking system. I mean, we're about a year out from last year's failure of Silicon Valley Bank in March. So maybe we get another March like that. I don't know. But the regional banking sector looks a little bit shaky. But, outside of that, I mean, people are making money in stocks. There's big moves happening on daily and weekly basis still.
So what's the extreme bear case? Like how bad could the regional banking crisis get? I know, like you said, last March, it created a pretty big washout, which was a great buying opportunity for both stocks and Bitcoin. But is this like 08 level? Is it worse? Is it not as bad?
Yeah, banking is tough because it's always a story of confidence or lack of confidence. And right now, there is a lack of confidence among a lot of regional banks because they have some exposure to commercial real estate. Obviously some banks more than others, but with that comes concerns that, some banks will need to raise capital or that some banks are potentially insolvent. And so there's a lot of questions and you have a lot of leverage on banks' balance sheets and things can happen in a hurry with deposit flight. And so those are the concerns. And so what can look like a fairly benign situation can very quickly turn into a very scary situation. With NYCB, the question is, does that start to creep into other bank stocks? Do people lose confidence in the solvency of those banks? And what makes this a little bit scarier in some ways than last year is that last year it was a question about the value of government bonds on banks' balance sheets and whether the losses there might have to be realized and create, a loss of equity. Now it's what happens if commercial real estate prices keep going down? Could there be holes in banks' balance sheets? And that's a much harder problem to fix. The Fed just can't come in with a BTFP program and just back all of the commercial real estate in the United States. They're just not going to do that. Now, maybe there's some ways for them to help to lower stress in that area, but it's in some ways a scarier problem. It's also a slow problem. It's a slow bleed problem where banks, slowly write down parts of the real estate portfolios as they go bad. But these things can accelerate and they can create crises of confidence. And that's where, we really have to keep a close eye, because that is certainly still a risk on the table.
So if the worst case, like contagion situation happens, like so you're saying it's more of a slow bleed. It's not like things are just going to like just implode overnight, or is there a situation that a black swan event could happen like that? And like, if so, like, how can people protect themselves, or are there areas of the market that you guys are avoiding, or hedges, or, I guess from the risk perspective, how are you guys thinking about it?
Yeah. If I think about how it compares to 08, 09, there are some similarities and some dissimilarities. The banks are in better shape than they were in 08, 09. The leverage levels are lower. They have higher capital because they were forced to raise more capital over the last decade or two. So that is good. However, banks are still very leveraged. So, they went from having, call it 15 times leverage to having, say, 10 or 12 times leverage on the balance sheet. So they're still levered. And, like you had with the mortgage problem in 08, 09, there could be a situation where you do have cascading losses and then people pull back on lending. That further hurts values. Now, the Fed can help by lowering rates if they have to. But yeah, there are some scary scenarios potentially out there. I don't want to get people too spooked. Again, I don't think this is quite like 08, 09, but there are some similarities with the commercial real estate and, the mortgage issues that banks had on their balance sheets back then. As far as hedges are concerned, luckily right now, people aren't really paying attention. So if you want to go out and put hedges on, it's relatively cheap to do so. The VIX is still relatively low. You could put on index hedges. There's a lot of different ways to do that. You could do that by, say, just outright shorting index ETFs, shorting index futures. You could buy put options or put spreads, again, relatively cheap at the moment because of the low VIX. You could, avoid the banking sector altogether, which is kind of what I'm doing at the moment. At some point, maybe I'd be looking to pick up some bargains, but the bigger banks are in much better shape this time around. They don't have quite as much real estate exposure as a percentage of their total assets. So unlike the 08, 09 crisis, I don't know that betting against the big banks is really what you'd want to do here, but, maybe a short position against regional banks or small cap indices that have a lot of smaller banking components to them. That would be another option. Certainly there are, maybe this is also what we're seeing with the strength in gold. Maybe there's some flows there because of concerns about the banking system. Gold and Bitcoin might actually do pretty well, although you never know. Sometimes they initially sell off and then start to gain ground further into a crisis. So yeah, those are some ways. Government bonds, strangely enough, might be a decent hedge, like short-term government bonds. If you do expect the Fed to have to step in to lower rates to help the situation, owning a bunch of short-term government bonds that are currently yielding 4.5%, if rates go down, you not only pick up some appreciation on those bonds, but you also get the income along the way. So that would be another safer hedge, so to speak.
Awesome, man. Yeah. Thanks for walking us through that. I know there's, a lot of fear mongering around this, and, it gets clicks, right? Like fear sells, but it doesn't pay. And it's always good to hear like a balanced perspective, and like, yeah, just help people think about like, okay, if this shit does implode, what can you do? And, control what's in your control and stop freaking out about stuff that's not.
Well said.
Nice. What else are you guys seeing out there, Nick? Or is the retail space still having good earnings, or where are they at?
Yeah, it's a mixed bag. Like for example, you had Home Depot come out, you had Target come out, and there's still weakness in housing. So of course we're going to see weakness in Home Depot and the like, Lowe's and the like. We saw Target, which is actually up over 15% from when they reported. And so that's been a winner. I've been long that. I've been buying and accumulating as it's been selling off. So they actually numbers are really what's happening is profitability is getting better. The top line is still weak, but things are management is finally, you know, waking up to certain things and leaning down. And so that's been good to see that in the results. Abercrombie reported they killed their quarter. They did great, but their guidance, you know, wasn't exactly super exciting, but Abercrombie brand is doing fantastic. So I think it's a matter of, you know, in terms of retail, consumers are choosy where they're putting their dollars, what they're buying. There are winners and losers, and I expect that that's going to continue. That theme is going to continue going forward, where there's going to be brands really having a rough time, and there's going to be brands like Abercrombie and Lulu that are kind of killing it. So we still have more to come there to see, but the consumer's still spending. They're just choosy, right? And I think that there's probably also a lot of services that are pulling the consumer dollar away from retail as well. But so far, that's been nothing to really worry too much about. So we'll have to continue to see how 2024 falls in terms of, you know, the economy and the consumer spend. But I was thinking about, I came across this tweet about Florida real estate and how they're getting flooded with inventory. And I was just looking at the actual data, and the inventory is increasing. The month's supply is increasing. The time on market is increasing. And like, it was this tweet of all these red dots of just so many homes on the coast. And it was crazy. And I got to thinking about that. And I was like, I wonder how that's going to mess with the housing market in certain areas. But it does appear that inventory is coming back online in certain spots. Maybe that'll help housing prices kind of cool off a bit if the Fed doesn't lower rates anytime soon, which we'll have to see what ends up happening with that. Seems to be getting pushed out. Rate decreases keep getting pushed out. But I've been thinking a lot about that too, because the housing market is something I'm constantly thinking about in terms of consumer. So that was interesting. But other than that, just keeping an eye on the data, keeping an eye on the S&P price action. I'm expecting a sell-off soon, but I mean, I think people should be expecting that a correction could come anytime in the S&P 500. It's been very euphoric out there. The wealth effect is another thing I've been thinking about a lot. I tweeted this today that risk assets are not doing what people thought they were going to do when the Fed raised rates. People thought that the Fed was going to raise rates. It was going to crash it was going to really destroy the housing market, which it definitely messed up the housing market, but prices didn't really come in, right? Too much. Stocks are making all-time highs. Bitcoin's making an all-time high. Gold is about to break out or made an all-time high. So nothing is really acting as people expected it to act. So that's something that's interesting to note. And I think that the reason for that is because of just how consumer balance sheets and the economy was going into the rate hikes. So I think that maybe this time is different kind of thing. It's something I'm sure we'll look back in the history books, but people are taking on risk. People are spending money. Nothing's going as we thought. And I think that has a lot to do with the fact of what the pandemic and the stimulus and all of that did for consumer balance sheets going into this now. So that's what I think the explanation is for anybody wondering, like, why is nothing working as the textbooks say, basically.
Yeah, it looks like the market's still pricing in a rate cut in June. But yeah, it's kind of weird, right? Like asset prices at all-time highs, the stock market just keeps grinding higher. And yeah, I pulled up the tweet with the map that you were showing here, where it was just showing how many real estate listings with the word motivated by state. So this is kind of interesting, right? It's like, you know, how desperate are people to sell? And one thing that Florida is kind of like known for, and I guess good at, is building, right? Like having supply. And I mean, we were just there in the last 6 months, and I have friends that still work in the building space, and they're like, yeah, man, we're just cranking out inventory. So there's a ton of flat land. There's a ton of people that love to live in these cookie cutter neighborhoods, and they can just build them super cheap and just pump them out really fast. So, the narrative that we've been talking about ever since like really pre-COVID was the fact that supply was not there. So yeah, if supply has caught up, and rates are still staying high, then maybe prices are going to come down. And I created this chart. I didn't create this chart, but this is a chart of single family home prices. And you can see what happened during the '08 implosion was prices kind of topped out in '05 through early '07. And then they crashed through really the low was end of 2011 or 2012, about 30 to 35%. And I noticed that, after things went crazy during COVID, prices kind of topped out in mid 22, and then they've been trending down. So I'm just looking at like, okay, what happens if something like this happens? Maybe we don't pull back, 30 or 35%, but there's definitely downside risk. And yeah, like we had rates come out this week as well, and they're not really going down yet. They're still just kind of hovering around that 7% range. So if you've got supply up, you've got rates that are still high. Yeah, I could see that being like a bearish pressure on prices.
It'll of course be localized to certain areas, but it's definitely a possible positive for the home buyer, But then the issue with Florida is it's the homeowner's insurance, the flood insurance, the hurricane insurance. Like
a
that's
lot of
the
people have
problem
been
that
like
they're really
talking
having.
about double or triple, right?
Double
just
easily.
Yeah.
Yeah. So, and of course, coastal areas are more the issue there. But yeah, it's going to be really interesting to see how the housing market unfolds going forward, especially with rates potentially going down.
Yeah. Well, I mean, the risk appetite is still out there. Let's talk about some altcoins. I mean, Ethereum is up as of right now, 8 or 9%. And I'm still holding. I haven't taken any profit on this trade. I was buying in the low 2000 again. And just, we're at major kind of resistance from the last market cycle where I took profit. So this has been a good trader. But yeah, I mean, if we look at total 3 and just look at the alt charts, a lot of altcoins are still popping off. Even today on my major watch list, we've got like a dozen that are up over 10%. And a lot of the AI things are moving, like Render, big pop, beautiful trader moving from zone to zone. You got Fetch AI, which is up huge. So
Wow.
AI.
Wow. Yeah, that's a
but yeah, I mean, it's a good time to be a trader. It's a good time to be an investor. If you're not making money right now, and if you didn't crush 2023, what are you doing? Get in the community. Let us help you.
Yeah, definitely get in the community. But have you been getting the text about like, what should I do with my Bitcoin and ETH? Because I surely have.
So have they started? Because before last week,
they've started. They started this week. I got a few of them this week, specifically asking about ETH and Bitcoin, and one about some altcoins, some other altcoins. But yeah, so I don't know. I'd be curious how that changes going forward, but it's starting.
I actually had to remind people that I had sent Bitcoin, like some friends and family. I'm like a few days ago, I'm like, hey, how's your Bitcoin wallet looking? Just making sure they still had it. And they're like, oh shit, this is amazing. So when prices are at all-time highs, that means 100% of people are either in profit or they're not down a bunch. So the market sentiment shifts a lot. Trav, what about you? Have you been getting hit up?
A little bit, yeah. Actually, yeah. In I would say just the last couple of weeks, it started to pick up a little bit. I had a couple messages, and people seem to be actually talking about crypto and stocks again. So I'm definitely seeing that emerging interest for sure.
Cool. Awesome.
Oh, well, I did want to say real quick for anybody that has not read the Daily Doe today, I did a article for the Daily Doe on like that question of, do I sell? When should I sell? When should I take profit? What price is like high enough for me to take my money and run, kind of thing? I think that specific brief would help a lot of people that are questioning that. And I think that the main takeaway is, you need to understand what kind of capital you're looking at making a decision on, because there's short-term trading capital, which of course you'll have targets set for. There's short-term investing capital, and then there's long-term investing capital, which is like your retirement style holding period, you know? So first, know that. And then second, you have to also look at like, what kind of profit are you looking at right now, and how could that change your life, or how could that help you reach a specific goal as well? So I just encourage anybody that's like paralyzed right now with what to do, because I have gotten a lot of questions, to read that and maybe walk through some of those questions with yourself or your partner, whoever, you know, you make decisions with.
Yeah, that's a great point. I mean, if there has been any common themes among the question is, you know, win profit target, right? Like what's your target? And I mean, I'll just tell you guys, like, nobody knows where the highs of these market cycles are going to be. I think the most likely situation is 6 figures. Does that mean I'm going to hold everything for that? No, I'm going to scale out along the way, but I'm also not afraid to buy up here if there's like a good trade setup. But like Nikki said, I mean, that type of capital would be like a shorter term trade where I can just like juice the returns a little bit, or a lot of it. So, but yeah, I mean, you know, I talked about this in the market update in the community last week, just doing a lot more like in detail TA of like where I'd start to scale out and the trade setups I'm looking for. And yeah, it's been super active. We've had a lot of people coming into the community that should have been here a year ago when prices were low, but that's how things work. You know, we try to get people in when things are boring, and the message is like, guys, stick with it. And now it's like, the message is, well, I hope you planted some seeds. But the good thing about the markets, as we always say, is there's always another trade.
There's always another trade.
Opportunity.
That's right.
Yeah, there really is.
Yeah. All right, Nick, I know you got to go in a minute. Trav, anything you're looking forward to or looking out for over the next week that you think people should be aware of?
Yeah, we have a pretty busy macro calendar, not only this week, but next week we've got the big CPI inflation report in the US. So that's going to be key to watch early next week. Of course, that'll have implications for all the assets out there. So we will be watching for that. This week, we also have a big unemployment report on Friday in the US. We also have the Euro Central Bank meeting tomorrow to set interest rates, even though, you know, the market basically expects them to sit on their hands again and do nothing. But always important to listen into those. So yeah, so we've got the heavy macro calendar. Also, you know, just looking for the next idea, the next trade, the next rolling bubble. We've got some ones that are working, like, you know, even the Chinese stocks today showing some life. That one looks like it might be early on in a potential trend shift. So we'll see. Those are definitely some areas. I mentioned the gold stuff earlier, keeping an eye there for potential as well. So it's an exciting time to be an investor, to be in the community, and just to, you know, be watching the action.
Absolutely. Nick, what about you?
Well, instead of me saying what I'm looking out for, I'm just going to give people a little word of advice, because, you know, things are feeling euphoric and exciting out there, but the wealth effect is hitting hard. And I just want everybody to be aware, you know, and prepared. We could see a correction. We could see a pullback. Don't be caught off guard by it. But we are in a new market environment where pullbacks equal opportunities, right? We're back in a buy the effing dip, you know, type of trend. You know, pullbacks are gifts. Pullbacks are gifts. I'm going to say it like that. Like, think about it in that mindset instead of getting afraid of it. Know that it's very likely, very probable that it's going to happen. And B, see it as an opportunity and a gift for you to be able to, you know, get a better cost basis and compound your wealth. So that's my advice.
Well said. Yeah. I mean, I think it's funny when we're in a healthy trend and prices run retracement extension to the upside. The two biggest mistakes you can make is probably the dumbest one, which I've seen a lot of on Twitter, is people shorting a trend. If you want to lose a lot of money and be really frustrated and look like a fool, short healthy trends. You'll just continue to get run over. And I encourage that behavior because it actually adds fuel to the trend's fire. When people short and they get squeezed, it adds to that upward momentum. Number two is, like Nikki said, being afraid of dips. Like if you're freaked out or you move your stops too close, or you don't think through risk management, now is the time that you could really screw something up. So get in the community, learn, develop your skills, and I'm sure you'll get on the right side of the market. So and then outside of that, I mean, the other thing I'm looking for this week is obviously just looking to see what happens, which possible outcome happens here around the 70K zone. If we get a nasty washout dip, I'm going to be there for it. If we get a nice, what I call a 1, 2, 3, 4 breakout pattern, I'll be there for that. If it goes parabolic and takes off too quickly, I'll just kind of watch it. But there's no shortage of opportunity in the alt market as well. So stay disciplined and develop a plan and stick to it.
Well said.
And next week we'll go ahead and dive into more questions. But this week we just wanted to get a quick episode out talking about this all-time high and some stuff to look out for on the macro side. But any final thoughts, guys?
No. Join the community.
We talk money.com/community. Hang out in the Discord, come to the live classes. And
I have a class coming up. I have a class on wealth strategies with retirement planning coming up on the 12th of March next week. I think that's a Tuesday at noon Eastern Standard Time. The recording will be available to members. But if you want to get in on that class and learn about, how to maximize wealth through retirement planning, I'm your girl. We're going to do that.
What are you going to cover there?
We're going to cover basically specific strategies around how to get more money into retirement plans, asset protection strategies with retirement plans, how to save money on fees, because that gets a lot of people, what to do if you don't have access to a retirement plan, and just some of the ways you can maximize wealth with getting even more money than you ever thought possible with something called a pension plan for self-employed individuals. We're going to touch on the pension plan strategy, which is something I think every entrepreneur should be aware of. And
that's how we basically fully funded our retirement in our 30s, right? Was using that strategy. And now we don't have to think about retirement, and we just get to focus on higher risk, higher reward ways to build wealth.
Yeah, a lot of people don't know about it. A lot of CPAs don't even know about it, believe it or not. So there'll be something for everybody in there on Tuesday. But join the community to get access.
Yeah. Awesome. All right, guys. Trav, Nick, thanks for being here. And thank you guys for watching. Do us a favor, leave a review on your favorite podcasting platform. Subscribe to the YouTube channel. Tell everybody you know about this show so we can get the word out and help more people build wealth the right way. And we will see you guys next week. Take care.
Cheers.